Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. On today's show, we're talking about a comprehensive look at short-term rentals in a recent report from the commercial brokerage house CB Richard Ellis. This 52-page report outlines some major findings on the impact of short-term rentals on the hospitality industry. The short-term rentals segment is also undergoing significant change as it matures. Overall, the supply penetration rate of short-term rentals into the traditional hotel market reached 10.4% of the overall market in 2019, and it's expected to hit 12.2% this year with the addition of more than 100,000 new units in the United States. Short-term rental supply grew by 26% in 2019, and that's down from 39% growth in 2018, after 7 years of exponential growth in the range of over 100 to 500% growth since short-term rentals really came into existence in 2009. Growth rates are expected to slow further to 19% of the market in 2020. Now, recent growth for short-term rentals has been primarily in suburban and rural areas. Units in the urban markets only make up 20% of the total supply, down from more than 45% of the supply in 2014. Los Angeles remained the largest short-term rental supply market in 2019 after overtaking New York City last year in 2018. Los Angeles, New York, and Orlando together account for about 12% of the total short-term rental supply in the U.S. last year. Guests consistently cite price and location as their top reasons for choosing alternative accommodations. Increasingly, there are branded apartment hotel models with companies like Sonder, Stay Alfred, Lyric, and Domio, and they depend on price arbitrage between monthly rent payments and nightly short-term rental rates. Many companies have entered the market, primarily in U.S. urban centers. There's an undeniable change underway in the lodging sector. Determining the total supply of short-term rental units is not easy, though. The most widely available and reported estimate is the total number of units listed on each platform. There's more than 1.5 million short-term rental units on various platforms listed last year, at least 7 times the amount back in 2014. But not all these units were active all the time or available for booking year-round. For example, at any given point in time, you might have only 30% of the total unit count available for booking on any given day. If we examine where these units are located and their market penetration, you find that nearly 20% of the resort market is made up of short-term rentals, with 80% being made up of more traditional hotel product. 13% are urban, 10.5% are in small metro areas, and 6.5% are in the suburbs or near airports. Many factors motivate consumers to choose short-term rentals, including home-like amenities like kitchens, more space, or an unusual experience. But price and location are the dominant factors. According to an annual survey of travelers by Morgan Stanley, more than half said that price was the most important factor for short-term rental use. In fact, short-term rentals provide an affordable option to tourists visiting cities where hotels are disproportionately high-priced. After price, location is generally the most important reason for choosing a short-term rental. 1/3 of Morgan Stanley respondents said location was the biggest reason for choosing their particular short-term rental unit. And the CBRE analysis of hotels and short-term rental location data showed that more than 35% of short-term rental properties were located more than a mile from the closest hotel. And that figure increased to 57% for rural locations. In most markets, those with high short-term rental supply growth, average daily rate increases have been below inflationary levels. This makes sense given the elasticity of short-term rental supply. It can be delivered during times of peak demand, for example, a major sporting event, and then they disappear from the market afterwards. That limits the pricing that traditional hotel operators have usually relied upon to optimize rates during those high-demand periods. The hotel industry has not experienced real average daily rate increases since 2016, once you subtract inflation from the numbers. This is because the additional supply coming from the short-term rental alternative keeps a lid on pricing. Distinct business models have evolved in recent years across the short-term rental universe, not to mention the large number of companies that have started to assist these companies on operations, on hardware, on guest support services, revenue management, pricing. There's a ton of innovation going into this particular segment. The rise of professional operators since 2017 is evolving faster and further with the advent of new business models. And even I myself am investing directly in professional business management for short-term rentals. And you get a lot of advantages from that. Number one, you get to consolidate multiple units, often in the same building. That gives the operator the efficiency of cleaning and managing multiple units as if you were running your own hotel. Number two, branding the units. It creates a differentiated, consistent, trusted product for guests and for consumers. Number three, it enables you to bring capital to scale faster and build brand awareness. And finally, number four, we can focus on building purpose-built or converted apartment buildings, which are then converted to short-term rentals. The one thing the report did not do a good job of is dealing with the impact of regulation. Regulation absolutely has reduced the number of short-term rental units available in certain markets, and the report by C.B. Richard Ellis does not deal with that at all. I sent an email to the author of the report asking for an explanation why they didn't cover government regulation and the impact that that might be having on the short-term rental market. Very keen to hear what their answer is. But in spite of the new regulations, there's no question short-term rentals are continuing to grow as more supply enters the market. As you think about that, have an awesome rest of your day. Go make some great things happen. We'll talk to you again tomorrow.